Ladies and gentlemen, it is happening. In a never imagined scenario, we are seeing tens of thousands of bank accounts being froze, even up to hundreds of thousands across the country. And we have also just got news that a major US city has just hit depressionary levels. It is no longer a drill, everyone. It is no longer speculation. It is happening right now before our very eyes. So, what bank accounts are locked? What major US city is collapsing, and what other data do we have right now to tell you that you need to prepare for what's coming? Well, ladies and gentlemen, that's exactly what we're going to cover in today's video. So you know what time it is. Let's get straight into the news, the facts, and the data. So look at this, everyone. Savings app CEO says 85,000 accounts have been locked in a fintech meltdown, and they said we never imagined a scenario like this. So, what exactly happened? Well, for 3 weeks, 85,000 Yotta customers with a combined 112 million in savings. So this is not a small financial institution. This is a significant amount of money has been locked out of their accounts. The disruption caused by a dispute between a fintech middleman, Synapse, and Tennessee-based Evolve Bank and Trust has upended lives, they've said, and it definitely has. And forced borrowers to use to borrow money for food and thrown upcoming events like surgeries or wedding into doubt. So imagine, you've got major plans for your money, and then all of a sudden, out of the blue, it is frozen. And this is what we're seeing happen again and again, people. This is not a rare occurrence anymore. We're seeing financial institution after financial institution have these meltdowns and people losing access to their money. And I think it's only going to get worse. So they also said here, has been in contact with other fintech principals impacted by the collapse and failure of Synapse, and estimates that 200,000 total customers with balances are locked. So that's right, not just 85,000, 200,000. So unlike what they're telling us, the banking institutions, your money is not safe. The banking failures are not over. We're still seeing every month another banking institution go down. And what are they also telling us? The economy is great. Well, I just got proof, probably the best proof I can show that no, the economy is not great. And it's not even at recessionary levels. We are now at Great Depressionary levels. So look at this. Chicago PMI, that's his Purchase Managers Index. This is pretty much the best indicator you can have for the economy. Craters, not to recessionary levels, but to depressionary levels. So after unexpectedly slumping last month to 37.9, the Chicago PMI Index cratered even more unexpectedly in May, when it defied hopes of a rebound of 41.5 and instead tumbled even more, sliding to a cycle low of 35.4, which was not only below the lowest estimate, but was staggeringly low. To get a sense of just how low, the last 2 times it printed here was during the peak of COVID and the global financial crisis. So I'll go ahead and bring this chart up here and I'll shrink myself so you can see it. The only other time it was at this level was during COVID, when they completely shut the whole world down, and that was an artificial temporary collapse. But there's no shutdowns happening. This is just from the economy collapsing, and the only other time it was lower was during the 2008 financial crisis. So they can put out whatever, fake propaganda news to say that the economy is doing great they want, but numbers don't lie, and they can't even hide it anymore. We're seeing many cities around the US completely collapse, and it does feel like a depression. So let's have a look a bit deeper at this report. So the business barometer fell at a faster pace, signaling contraction. New order fell at a faster pace, signaling contraction. Employment fell at a faster pace, that's in contraction. Inventories fell, that's in contraction. Supplier deliveries fell at a slower pace, that's in contraction. Production fell, that's in contraction. And order backlogs fell. So business is falling, people aren't ordering stuff, unemployment is going up, inventories are falling, supply deliveries are falling, production is falling, everything is falling. So you cannot tell me we're not in a recession or heading to a depression. So prices paid rose at a slower pace, signaling expansion. So we have not just a depression, but a stagflationary depression in which everything else is going to hell except prices. They keep on rising. And that's exactly right. They're trying to tell us that inflation is over. No, inflation is still going up. And the only reason why it may seem like consumer spending is going up or GDP is growing is because of record migration and inflation. If you took out inflation and record migration, we would be in a severe recession. And also, what's keeping everything going is record government spending. But look at this next article. So JP Morgan Chase CEO warns extraordinary government spending will trigger major economic fallout. And I think we can all agree the US government is at its most indebted in history. The deficit's at their highest in history, and it's only going to get worse. So at AllianceBernstein's strategic decision conference, Diamond said he's betting unchecked government spending will end in stagflation. And the term for a dreaded combination, of those that don't know, is high inflation and high unemployment. People saying that high inflation is good for the economy and that you can't have high unemployment with inflation. No, that's not the case. You can get to a point where the economy is crashing, we have high unemployment, but also prices are still rising. And this is the worst case scenario. I look at the amount of fiscal and monetary stimulus that has taken place over the last 5 years. It has been so extraordinary. How can you tell me that it won't lead to stagflation? And I don't think it will lead to stagflation. I think we're in stagflation right now. What do you think, everyone? It might not, but I, for one, am quite prepared for it, he said. Diamond's economic outlook echoes a warning from JP Morgan's chief market strategist, who said a few months ago, "We believe there is a risk of a narrative turning back from the Goldilocks towards something like 1970 stagflation, with significant implications for asset allocation. Investors should be open-minded that there is a scenario in which rates need to stay high for longer and the Fed may need to tighten financial conditions." Well, I think the Federal Reserve needs to tighten financial conditions right now because we still have surging inflation. They're saying the economy is great. Well, we all know it's not. So they need to lift interest rates now to stop this before it happens to create an even bigger crisis down the road. So again, everyone, like I try to warn about, don't keep all your money in your bank at once because things like this could happen where your bank account could be frozen in an instant. Now, that's a new segment of today's video, and I want to talk about today's video sponsor, Hertz Energy. That's ticker symbol HZLIF. Now, I've got an exciting opportunity to share with you, and it's something that I could believe could have significant impact on your portfolio if the right conditions play out. So Hertz Energy is a relatively small company with a market cap of just 10 million USD, but don't let the size fool you. This company is positioned at the crossroads of the past and the future, and ready to take advantage of some incredible opportunities in the energy sector. What makes this company stand out is its involvement in the James Bay region of Quebec, an area known for its rich deposits of lithium-bearing minerals. Now let's talk about the potential upside. We've seen other companies in the same region experience astronomical gains. Check out these numbers. A company went up 856% in 2.5 years. Another company went up 1,342% in 3 years. Another one went up 5,900% in 3 years. Another one 606% in 11 months. So these impressive gains were all driven by lithium discoveries in the James Bay region. However, due to significant economic downturn in China over the past year, the price of lithium has plummeted by 85%, dropping from 600,000 to 100,000. So this dramatic drop has forced many lithium companies out of business or into dire financial straits. Yet lithium is now cheaper than it was in 2017, even though demand for electrical vehicles has skyrocketed since then. But out of this challenging environment, Hertz Energy has emerged as a potential gem. The company owns 2 district-scale projects in the James Bay region, situated right next to major players like Rio Tinto and Patriot Battery Metals. These are some of the most prolific projects in the area, known for their rich spodumene and pegmatite deposits essential for hard rock lithium mining. Now, one of the key factors that make Hertz Energy stand out is its leadership. Carl Maury, the founder and CEO, has a proven track record of building successful companies. He is a retired police officer who has already played a significant role in discovering the biggest lithium projects in the James Bay region. So Carl Maury is now leading Hertz Energy with a vision of turning into a diversified energy business. Recently, Hertz Energy acquired a uranium project in Canada, which had promising exploration results back in the 1970s. But with modern technology, the company plans to revisit and explore these historical results, adding another dimension to their energy portfolio. This acquisition could be a game changer as uranium is becoming increasingly important in the global energy landscape. Moreover, Carl Maury has secured exclusive worldwide disposition rights for a patent pending exploration technology developed in collaboration with Penn State University. This innovation technology aims to dramatically reduce the cost of extracting lithium from hard rock, potentially revolutionizing the industry. The key to this technology is reducing the heat needed to separate the chemicals from the rock, making the process much more cost effective. So to sum it all up, Hertz Energy is one of my top energy stocks I'm watching right now. They have a prime lithium properties. They have two highly prospective lithium properties in the James Bay region of Quebec where massive discoveries have been made. They've diversified their energy plan. They're recently acquiring a promising uranium project, adding another layer of potential, and they have innovative technology. They're developing a groundbreaking extraction technology with Penn State University, which could have significant lower extraction costs. So Hertz Energy, again, that stock ticker symbol HZLIF, is uniquely positioned to benefit from the immense deglobalization of commodity supply chain and American technology boom. Their small market cap and strong leadership provide an excellent opportunity for growth. And if you're interested in learning more, check out the pinned comment for extensive data about the company and its projects. Now remember, I'm sharing this information with you because I believe in the potential for Hertz Energy, but always do your own due diligence before making any decisions. Thanks for watching. I'll see you all in the next video.